Hello, this is Mike Turner. I'm going to take you through our market forecaster in our continuing series of getting the most out of the TurnerTrends Tools. So let me jump right into the screen that you will see when you come up when you go to TurnerTrends Tools and go down to Market Forecaster. This is the screen that you're going to see. I'm going to spend a little bit of time taking you through this particular chart, because all the charts we're going to look at will have the same kind of information on it. The information that's back here in this black line, this is the history of this, in this case the SPY, the S&P 500. This list of cycles, we call these super cycles, and this is all predicated on a mathematical model called a Fourier transform. And you really don't need to care about what that is, but it is basically a theory, mathematical theory, that is very, very, very strongly used throughout all of scientific research. Is that you can take a series of sinusoidal waves, sine waves, and if you combine the right number of them with the right amplitude, the right frequency, that you can exactly replicate all of the history of whatever you're measuring. So in this case, we're measuring the market. In this specific chart, we're measuring the SPY, and we go out and get the hundreds of thousands of sine waves that might last from a few days to several months in duration, and they get combined together through this formula, and those sine waves will exactly, to the penny, match the movement of the historical pricing range of, in this case, the SPY over time. And we go back about 25 years to get that much information to make our analysis. Now, we go through and find within that range, that 25-year range, how many cycles of time, how many segments of time did we find exactly the same cycle, the same sine wave. And in going back through this research, we found 1, 2, 3, 4, 5, 6 different what we call super cycles. These are cycles, sine waves that show up in every segment of time. The theory behind our forecasting is that if those sine waves were in place throughout all of history, the odds are pretty high that those same sine waves are going to be evident in the future of this particular chart of the SPY. And so we take those sine waves and we combine them together, and because they are sine waves and they go on forever, we can just run them out into the future, and we do that and in a composite, and that's what this blue dotted line is. So this blue dotted line is telling you that based upon these cycles, running them forward in time, that the odds are pretty high, at least 67% of the time, that the market is going to stay pretty close to that blue dotted line, and really in more higher percentage than that, it's going to stay within this band we call a volatility band as to how much that particular stock or ETF, in this case the SPY, is likely to move within that band over time. So when I'm looking at this chart, the green represents an uptrend, the red represents a downtrend. So what you want to look at is really concentrate on the first segments of the first trend that you see. So the first trend here is positive. It doesn't matter to me how positive it is, it's just that it's positive. So if I'm making a decision about whether I want to buy something within the S&P 500 or the SPY in this case, then it's telling me that I could buy at this point and that it is likely to move up a little bit. Now, I know those of you who are options players, you look at this and say, oh, wow, I can go out here and pick a time that looks like that the SPY is going to actually get to. I can trade some options that will take that into account. You need us to keep in mind that the further out in time you go, the more likely it is that this line will change, because events will occur as time goes along. New cycles will be discovered as it goes back each week and calculates the new super cycles. It might find a new cycle that will pop up that is more relevant than these that we've got, and the forecast will modify as time goes forward. So just keep in mind that the further out in time we forecast, I mean, with these super cycles, we could run it out for the next 50 years if we wanted to, but the odds of the forecast actually occurring a year from now, 2 years from now, 5 years from now, exactly like we're going to forecast now based upon the historical information that we have on these time cycles, is almost zero. But there is a high probability that this first trend is going to be fairly accurate. A high probability. And it's reasonably high in how well this is going to trend overall. But the most valuable parts of these charts are the first trend that you see in the forecast. So in this case, we've got the SPY. We can look at the diamonds. You can see the diamonds are weak in the first trend. And again, it's not how much it goes down or how much it goes up. It's the direction of it. So when I look at this, this is telling me that the market is likely to move lower from a Dow's perspective over the next month and a half. So the trend is fairly strong to the downside, so that would tell me that there is a higher probability that we're going to have a bearish trend in the market, at least for the next month and a half. You look at the NASDAQ, it's kind of a little bit of green, a little bit of red, a little bit of green at the same time period. Look at the Russell, and the Russell is kind of red in that same time period. So you look at all four of these from a market perspective, an overall market perspective, and you've really got more red in the next month than you've got green. And so that kind of tells me that the odds are pretty high that the market is likely to move higher over the next month. Move lower over the next month than higher. But again, we show you a lot of information. Here's the United Kingdom. Here's Germany. You can look at various commodities. You got gold, the gold miners, silver, oil. Again, here is a pretty strong on oil for the next month and a half, and then it begins to tail off. But when you look at this, you need to understand that this trend right in here is the most important as far as what you should rely on, or you should, I guess, lean on as far as its significance of accuracy. The further out in time you go, the less accurate the forecast is going to be. Now, how accurate is the forecast? Overall, we're running about 65% on average, but some of these charts will run upwards to 90% accurate. So it's really got some valuable forecasting capability. Not a crystal ball, not going to tell you exactly what's going to happen, but give you some additional insight. We've got currencies, the FXE, the euro, the Treasury, the U.S. Treasury 20-year, and the dollar. You look at countries, we've got emerging markets, Australia, Canada, Japan, Brazil, and the like. You look at sectors, we've got all the major sectors: basic materials, energy, financials, technology, and the like. Then you look at the various forex currency pairs. Here's the euro against the dollar. Here's the British pound versus the dollar, the Aussie dollar against the US dollar, and on and on. Again, these give you an indication of movement. We've even got futures out here of beans, soybeans, cattle, copper, corn. These are the kinds of things that if you play in those markets, it's going to give you a very nice idea of what, at least from a time cycle perspective, what the future is likely to be. So again, I want to caution you that you can certainly look at these forecasts, and they're important to look at to give you a general idea of market movement, but pay more attention to the first parts of these forecasts than the ending parts of these forecasts. Now, over time, as this goes through the week, you will see the actual chart of what's happening on a week-by-week basis as we show whether or not the market actually moves up or down through the week. So we update this on a daily basis, but you get to see what it's doing from 1 week at a time. We reset at the end of each week. So that's kind of basically the overview of our system for market forecasting. Certainly we would hope that you would get a lot out of this, and if you have any questions at all, that you'd send me an email question at askmike@turnertrends.com, or give us a call at 844-818-9444 and talk to any of our support staff, and they'll be glad to help you, or if get a question to me if you'd like it to get to me directly. I hope you get a lot out of this. This is a very advanced forecasting tool, nothing else like it in the world, and it's well worth your time to spend a little time with it. Again, I hope it helps you make a lot of money in the market. Bye-bye.